Good morning, retail traders. This is Washboardjim with a sneaky snake trading strategy where we talk about chart patterns, moving averages, and being the now. I want to bring you a doom and gloom video for this coming week, where I think we are and where I think we're going and how I feel about a lot of stuff that's happening in America that I'm not comfortable with as a conservative. I used to be a liberal one time, but man, I can't live like a liberal anymore. It's insanity. And I'll say it again, it's crazy how they are acting. We used to have values and morals, but man, there ain't any out there anymore. So the first thing on top of my head is U.S. federal government is headed into a shutdown. What does it mean? Who hits and what's next? Back in 2019, the federal government came out and passed a bill stating that they would get back pay if the government was ever shut down. So that makes it a vacation for them, an added vacation, which, they're all probably happy to see, because they will get that back pay. I don't think they should, because, the government's being shut down for one reason, because they're dysfunctional. If it happens, Wall Street has a mindset, they're going to fearmonger it and talk about it, but down deep in their heart, they think that they will pay the bills, they will pass something, but on both sides of the party are to blame in this here situation, because, they're the federal government. We got a president that can't hardly speak. He's an embarrassment to the whole world, to the United States. So we came from being a world leader to being, I don't know what you want to call it, woke. The next thing on my mind is the budget, the debt ceiling. We're more than 33 trillion in debt. We've got about another 3 trillion to go probably before Biden gets out of office, might get to 35. We're only taking in 4.3 trillion right now, so we're not meeting the federal spending, which is actually 6.2 trillion, 6.3 trillion. So we do have a huge problem with government spending right now. I think we just sent 6 to 8 billion to Iran. We're spending the war in Ukraine, the failed policies of Afghanistan causing a world crisis, becoming a world power of, creating our own energy, to begging for oil from other countries, dirty oil that is to boot. So there's a lot of issues going on there with the debt ceiling. The next thing is the border crisis. We've got so many illegal immigrants, mostly men, uneducated, crossing the border. Military men, middle-aged men. 2.2 million people crossed the border just last year. On Wednesday, the border town of Eagle Pass, Texas, announced a state of emergency after nearly 6,000 immigrants crossed the Rio Grande River from Mexico into the town of roughly 28,000 in 2 days. That's 6,000 illegal, uneducated men, not counting the criminals that they didn't seize, the cartel, the fentanyl, the drugs, the people let out of prison, people that are mentally ill. I feel sorry for you ladies. Most of these immigrants are mostly men. So I want you to think about that and who you go vote for next coming election. My next issue is the money that we're sending over to Ukraine, a war that never had to happen. Over 500,000 people murdered in 2 years. A war that Joe Biden said, go ahead and have your small little whatever border crossing The way we left Afghanistan made us look very weak. It's probably one of the most embarrassing moments in American history. So that's a lot of stuff going on that doesn't make me happy about being an American. The next thing is Powell. This guy is an idiot. He has not came out once and said the government needs to slow down the spending. The spending is out of whack. It's crazy. I mean, it's going to. I feel sorry for the young children that are going to have to pay off this debt. I did not vote for Joe Biden, and I put that out in front of everything that I can say because I'm not responsible for this debt. This irrational exuberance, this spending. It's just, I mean, the economy is not in that great a shape. Not as good as they say it is. Not when I'm paying $5 for a head of lettuce, or I'm going out and I'm spending double what I used to go out when I go out and eat. The cars industry's been going to be all screwed up. The major factor that keeps America going is the car industry, and what they're doing to it right now is a total catastrophe. You ain't seen the butt of it yet. We're going to end up bailing out all the car industry. We already have. We sent them what, billions of dollars already, just a couple weeks ago, to remanufacture their plants. Millions and millions of dollars going to be wasted. It's not good for our environment at all, I don't think. It needs to be a worldwide project. And we're going to go, we're bankrupt. And he won't tell the government to slow down the spending. Whatever he does, it will not work. This could be going on for years. I looked at one of my credit cards' interest rate is up to 20%. And I'm going, I've never missed a bill in my life. I'll probably never use that credit card again. Inflation, he's way off key. And the problem will not get solved until we cut the government spending and we start producing a little bit more oil. Our energy sector is going to get in real bad shape the next 5 years. And again, kids, I did not vote for this idiot. So let's go ahead and get into the indices. I know this is a doom and gloom video, but I'm telling you why I feel about next week. Now, Wall Street is a different story. There's a huge disconnect between Wall Street and the private sector. So they're going to keep manipulating the numbers. They're not taking in fact that rent's too damn high. They're not taking in fact the food costs. They're not taking in fact the gasoline prices that drive up the cost. I'm paying almost $4 a gallon for gas when I was paying $2 a gallon back in 2-3 years ago. So that's, that everything I buy is doubled. Trash bags. I mean, I can just go on and on. In 2 years, because we can't cut the spending. I know this is a doom and gloom. That's the way I'm going to keep it. So this here is I'm going to put up the SPX first. Go over the indices. Clear this chart up. I'll use a TTM squeeze chart with moving averages and being in the now. So we had that big sell-off in 2022. We had a nice little triple top, pulled back, created a wedge, and we bounced off the 200 SMA, which I called out in the room and wrote a song about. The sell-off. We had these 3 black crows came in and bounced off that 200, and I said, we're ready, folks. You take it off the 200 or wait for it to come back and pull back. So we have a snake breakout, pull back, boom. Created a head and shoulders, inverted head and shoulders, which you have a head and shoulders up here. So when we called the trade out, SPX, I said we're going to run this thing up, break all these moving averages, and if we do that, we're going to hold up the 9 and see if we, and about the time we were up here at this double top, on the yearly double top, I said, we've got more room to go. I see a head and shoulders up here at the top, and I think we can hit it. So I'm going to draw a trend line. These are a weekly time frame on the bodies of them candles, and it ran right up to that shoulder line. That's what I called way in advance, about a month in advance. We were down here at the double top on the yearlies when I put out that video, and I was talking about where we're going to be going next. So we went ahead and hit that shoulder line. Then once we hit it, I called the pullback. I said, watch us hit this wick on this here candle right here, and that's going to be your solid support. That was way in advance. Once we hit this shoulder line, we came back within 3 weeks and nailed that resistance. That resistance was supported by this here support that we had right here. So I was able to easily call this double top break a pullback. So we pulled back and hit it. Then I called a reversal to the upside. We created a lower high, and now we're back down below the body of this candle, and we kind of creep down a little bit below that wick. So our next support, if it decides to pull back, is going to be the 51 EMA, which is right here. And I'm going to draw a price line all the way across that 51 EMA on the weekly time frame. Now on the daily, this is the SPX. We have a couple indicators that could cause a reversal in this market. One is the gap sell-off and the hard sell-off that we had here in the past 3 days. Real hard sell-off in the past 3 days, and we did break support. So I got to ask myself, are we going to buy on rumor and sell on news? Or are we going to go ahead and see what happens this week if it's into the debt ceiling bill, so they can go ahead and fund this stupid government? If not, now this is on the daily. We could easily pull back to this other moving average, and we have an expansion pattern right here. I call that an expansion pattern on the daily. So that next support can lie off the bottom of this pattern right here, and that's right at 42.67.55 would be your lowest support. That's the bearish look at it, because we did break below the solid support right here. And it could cause us to pull on back a little bit more and maybe find some resistance on the top of this expansion pattern, or even, which would be off that moving average, which is the, whoop, I need the right one. The 200 EMA. Now I'd really love to see that 200 EMA. Now I'm going to add one more moving average on here just to see the 100 EMA, where it lies. We'll change this here to 100. Change the color. Let's go pink. The 100 EMA will be your resistance if we do decide to turn back up. So we did drop below that 100 EMA, and we got the 200 EMA right here at a solid support on the bottom of that channel. So if we do have another week of drama, another big red candle down here, I think that would be the final final breach. Now, if we do come up and we break the 100, I think we can definitely move up higher and try to hit this here gap. There's a gap fill. So that's going to be a hard resistance to break. That's going to be right around 43.70 something. We're going to move it to the top of that candle. Or let's move it to the moving average at 43.71. I'll color that color into a red. Whoop. What did I just do? I'm going to color that into a red. What am I doing? There we go. I got it right now. So in summary, we need to hold support come Monday. If we're green, we can run up and hit break resistance of 43.4265 and try to hit that 100 EMA. And that's right at 43.7147, somewhere in that vicinity. And that's the SPX. The SPY, we're going to chart it up the same way. Pull up the 3-year time frame, and I called this out the same way I called out the SPX, and that was off the 200 back here back in September. We had a snake breakout, pullback, boom, created a double bottom off this here shoulder line of this head and shoulders right here. Inverted head and shoulders. I call this inverted head and shoulders out all the time. Came back and hit it, and then had a little pullback to a double bottom. We got snake, breakout, pullback. After the snake and the breakout, pullback, boom, he comes back and it pulls back to the double bottom out of the snake, which lands right on that shoulder line that we got right here. So we bounced up. I called resistance. I said once we hit that yearly double top, which was right here, once we hit that yearly double top, I said we got more room to run. We've got an inverse head and shoulders up here, so let's go ahead and chart this out right there, and that's right where we went. We started to pull back, so I called that previous double top resistance on the yearly support. So once we broke that resistance, it came back and found it. The wick is right on that wick right there. And then we bounced up for 3 days, and now we've pulled back to a weaker lower low and a lower high. This is a bull flag. This is presented as a bull flag. We can drop a little bit more and hit this 51. And that'll be a good solid spot, maybe to take this trade and run it back up. It needs to hold that 51. We can hold that 51, we got it made. And there's that 100 right there. That's down off the 50. This is on the weekly time frame. So the 51 is going to be your solid support. A little bit above it maybe. Now, we've had 3 good weeks of sell-off. 3 good weeks, with last week being a flush. We could hold that support at 431.46 if we break it. Run up to the 21 and try to hold the 9. That could happen. We could see that. Buy on rumor, sell the news when the government package gets passed. That, or they're going to fearmonger all next week about the government debt ceiling, and the market can kind of just be very volatile. So I'd be ready. I wouldn't be too brave and too brazen next week. I'd just play cautiously and try to get that done right. So we're going to bring this now to the daily. And the daily can run down and hit that 200 EMA right there. 200 EMA. Moving average. and that's got an expansion pattern right here. So I'm going to get rid of that. We can easily bounce off this here if we do have one more pullback, but look at this huge gap here. So we kind of had a shakeout already, and we kind of consolidated on Friday with a pretty hard sell off into close. And we had a couple good knives Friday. So the resistance on the daily will be the 100 to break. That's the 100 EMA. That's going to be the top of that candle. So that's going to be your hard resistance. Your first resistance will be the bottom of this candle right here, approximately at 433.32 if we start to be brave it next week and be a little bit bullish. But right now we busted support. This was a double bottom and we went below it. So I can see us pulling back real easily, hitting that 425 next week. The bottom of this here triangle, this Darvis box, or actually I called it an expansion pattern, and I'm going to draw a price line right there. 426.60 is my lowest support for next week. If that holds, I think we can run it back up and hit that 51. So I'm going to be a little bearish next week, this coming week, but I'm still going to, yet if we have a green day, I'm going to play it. I'm going to play whatever the market gives me next week. I'm not going to do any swinging unless something really good happens or anything like that. I call a beach trade out every morning. That first hour and a half is the most important day of the trading, where you can make good money and walk away. And I've been trying to teach that strategy in my room, or in our room. So the IWM's been slaughtered. It's been totally slaughtered. We are hitting a very important support line, which we do like to bounce off of on the weekly time frame. We bounced off this 21 EMA, or this is the 300 what? SMA. So that's the 300 SMA. I mean, damn, that's bad. That's bad news. So that could be a solid support to maybe start working this stock to the upside if they pass that debt ceiling bill. And Powell's already, Powell, this could, he already mentioned this could go on to 2025 to 2026. This inflation, and they're not going to ever tackle it until we cut the government spending, or at least put some kind of anchor on it. So we're bouncing off this moving average, and we could do it again. We've had a real good hard sell-off on this weekly time frame, and we could start to see a reversal. So that's what I'm saying. Wall Street's going to look at this as an opportunity because we've had such a hard sell-off. I'm going to explain it. Hard means heavy, means irrational, means it's going to either be a hard support and hold, or it's going to be a hard resistance and stop. It's very hard to break. That's my definition of a hard and soft resistance, a hard and hard support. Soft support would mean we have a chance to fail. A hard support means we have a chance to hold. So we're going to put a trend price line on this here IWM, and I'd like to see it hold that moving average at 175.76 next week. We did pull back and hit the bottom of this candle, which gave it a little bit of support right there. But we can easily fall and hit that 21 and maybe even dip a little bit more. This is going to be a volatile week, I think, this coming week. So don't try to be a hero. But we also had a real hard sell-off, which means we could have a nice run. One good day of a real good run. And just follow that trend until the end of the day and you get out of it. That's what I'm kind of looking at. So I have mixed messages, I understand. But I'm just telling you, I had to bring up the first part of the video because that's where I stand on America and on our economy. Now the QQQ, we've got a double bottom right here holding support. So that needs to hold. We failed the 21, which means we could have, if things get bad, we can easily drop to this 51, and that's a $20 dip. So I look at that and I say, well, that's kind of irrational. Maybe we can start to bounce off this here double bottom on the weekly time frame. So I'm going to put a price line right there. If that doesn't hold, we can see the bottom of this wick. And that's price line going to be right there at 354.56. So we go into next week and we hold the double bottom on the body of this candle. We can run and use the 21 as a resistance level right around 361.08 with a time frame of hitting up here and trying to break the 9, which would be right in here in this gap. So I'm going to put a price line right there on the body of that candle. I've seen a lot of reasons why to put it there. Resistance, support, 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 resistance, resistance, support. So I think we can easily find that again and have a hard time breaking it. Hard as means hard. 365.39. That's the indices. So that's where I feel about them. Now, I know traders that only trade the QQQ and the SQQ, the TQQQ and the SQQQ, and they make a ton of money. That's the only two trades they trade. So that's another trade idea you could think about. SQQQ when the market's weak, and when the market's bullish, the TQQQ. So keep them two in mind. I also like trading Tesla. Tesla's getting bashed again. We got the auto strikes going on. It's going to be a big mess up. Look forward to that. We're going to end up bailing out General Motors again. This will be the fourth bailout. We already started it. Biden says he's the best union president ever. He's full of shit. So the next one we're going to talk about is Tesla. Clean this chart up. We had a real good trade on this here last week. Right now we're supporting and respecting the 21 EMA. So if we can respect that, we've got a support level right in here. Bodies of these candles. Let's go to we're on the weekly. So we've got a trend line right here. This is what I'm going to call for support. No lower than that 220 area. 220. And then I'm going to try to find an equilibrium, that pullback right there. So we'll put the price line back on. That's a double bottom. And that's a pivot point. That's called a pivot point. I can see it dropping down to this triple top. Also, no lower than that 207. But for right now, this 221 area off this trend line, 1, 2, it didn't touch it yet, so I think we could pull down and hit it. And that'll be my 1, 2, 3 punch where we take it and run it back up to resistance. One resistance will be the shoulder line here of this head and shoulders. Right there. That'll be your resistance to break. Somewhere right around 274. And that'll going to be a hard resistance. So let's see it pull back and hit this trend line right around 220 this week. If that doesn't hold, 207.56. For the low support. First one being off this here 21. That's going to be right around 237.40. Let's put that price line on here. Right there. 239.35. If that holds, then we're going to continue up. But I think we're going to pull back and hit this trend line. Hit the body of the candle will hit that trend line, and then start to move back up, and that'll be a pretty good little trend spot. We can draw a trend line from right here, the bottom of this candle right here, to the bottom of that one, and that meets right off the 21. So I'm confident. I'm not the 21, but the 65 EMA and the 51 EMA. So that can easily pull down. Find first support's going to be 239.35. The second one is going to be off the 65 right here, off that trend line, right around 226.37 with a solid buy. I don't think any lower than that 220 area. Right around 220. And that's got to hold. If not, we could pull back and hit that 207. But I'm bullish. I'm very bullish on Tesla. I want to see it hold this here resistance, this support right here, next week. We're gonna put that in a red line. Bring this to the yearly. Yeah, low, possible lowest support that we'll see in Tesla will be 220. We want that to hold. And I've got the 100 EMA for your second support on the yearly. So that's double, triple confirmation that 239.35 is solid, 240 area. So that's going to be your first support. Second, going to be this moving average, the 300. The 200, EMA. And then the top of that trend line is your lowest support at 220 for Tesla. That's going to be it. I could talk about a lot more stocks. NVIDIA, irrational exuberance on NVIDIA. AMD broke support last week. We're about to hit my support here on NVIDIA. We had a pretty good hard sell-off on NVIDIA. So this is one in scalping area. We've got a 1, 2, 3. We could possibly hit this. Let's clean this up. So we're right on this moving average, which is a double bottom, triple bottom, 1, 2, 3. That moving average is a 100 EMA. I just put that on there. So that's a solid support. Now this is NVIDIA. We could see a nice little run back up here to this moving average, which held support, and that's the 65 EMA. We've got a triple bottom right here. 1, 2, 3. Bouncing off the 100 EMA. Run it up to the 65 and see if it wants to break the 9. If not, she'll create a Darvas box and go sideways. So right now we're at 416. Rob in the room called this out yesterday and was all over it. Made good money. Resistance to break 432.92. The 9 EMA. That's it. I hope everybody enjoys next week. It's going to be a fun week. A fun week. Very volatile week. I didn't know what to I wasn't in the mood to predict what was going to happen this last week because I knew it wasn't going to be good. And now I think with last week happening, we got to consolidate from that sell-off, or we continue on going down because of all the crime, all the high crime and all the drama that's going on in America. So I don't like to be a doom and gloom kind of guy, but this video I have to be like that. That's the way I'm going to use my mindset into next week. I'm going to be extra cautious. If I think it's kind of like growing a marijuana plant. Some people harvest a little bit too soon. They don't have the patience to wait a little longer. Sometimes that extra week could bring the potency of your weed up tremendously. But people think it looks good, so they're going to go ahead and jump in and cut that thing down. Well, that's the same thing with the stock market. We've had such a hard sell-off here in the last week that it's going to bring expectations to go ahead and buy in the dip. But yet, we still might want to wait another week for the debt ceiling to pass to see where we really are going to be. So I wanted to compare them too. It would be a waste of time to cut that plant down if the potency wasn't at its fullest, highest level. You're only cheating yourself. Same thing with jumping into a stock market that ain't ready to return to the upside, and that we've had one heck of an irrational run after a reasonable dip sell-off for the year. I think only 11% of hedge fund managers made money in 2022, where I made a ton of money because I played it like a champ. I created a strategy called the Sneaky Snake, and I caught knives all year long, and I've done the same thing this year. Every irrational breakout, I waited for the pullback to buy the dip. I was fanatic when NVIDIA pumpers started coming out and pumping this stock. We hit $500. This is from $100 in a year. I mean, just crazy how that run happened, and everybody was piling on. I mean, they're all 108 all the way to $500 in a year. I mean, I was cutting my strings off when we hit 100%. I was out of the trade. These guys ran this trade for a whole year up 500%, and they were still pumping it to $1,500. I've seen this happen with Intel. I've seen it happen with IBM. I've seen it happen with all these chip makers. They run them up, and they keep going, they keep pumping it. Everybody at Wall Street's running this stock up, making irrational target prices. And I'm going, no. I'm screaming, no. Tell the room, no. Don't fall for it. Trade it. The momentum's there. I mean, this is a huge gap. That's a $70, $60 gap up to the upside. From 300 all the way up to $374. 309, that's a $90 frickin' run. Okay? A gap up $90. Everything was priced in on that gap. Then they continued to run it on up. So now we've hit the 100. We're at a solid support with this 100. And if we can hold that, we can really have some good money made in NVIDIA next week. So really put this on your number one watch list. I think you can do well with NVIDIA next week. It's still very irrational. It's still very too much hot. It's too good. I could take Jim Cramer and break his neck. I could take all them analysts and debate every one of them and tell them they were wrong, pumping this stock when it hit 500 to 1,100, 1,200 bucks. I was very, very, very boisterous about that. Irrational exuberance. That's the kind of market we're in right now. Just think about how much of a run we've had this year. It's too much. And we have a long ways to fall. So just be extra cautious. I hate to be a fearmonger, but I don't think too many people are listening to me when we hit the resistance. And I don't think too many people were listening to me when we hit the support. Back in September, when I was screaming things were cheap. And I had people in the room, a couple, criticizing me for saying cheap back in September. And I was hearing it. Everybody on Wall Street, you could see the sell-off that we had. I mean, things were cheap. Now things are expensive. Very expensive. For the economy that we have and the world war that's going on, China falling apart, Russia falling apart. We got more bombs and guns being sold now than we've ever had in world history. We're paying for a war that we don't need to be paying for. We're going to end up spending trillions of dollars rebuilding that country so they could have their green city, just like what they've done in Maui. Their mouths are frothing. They're going to be some good plays, just because when they start to rebuild Maui, I'd be looking in what they're going to be wanting to do with that. I lived there. I'm very upset about it, but I digress on that one too. So this is an extra long video. I just kind of, like I said, it's not like my average video. I just want to get this out there and get it off my chest. Come in next week with a clear mind and just kind of listen to the news, pay more attention to the news next week than I probably ever have. And Monday is going to be the test day because we've had such a hard sell-off. I say hard, I mean hard. It means heavy. Heavy like 3 black crows that we had back here in September. 3 weeks. I mean, we went from 411 all the way to 356, $50 sell-off in 3 weeks, and I made good money on that. I really loved charting this out last year. Now this year it's been nothing but a run up to the upside, and when we hit that shoulder line, now we're coming back. And SPY tech will get hit with high interest rates. We're paying more than $1 trillion in interest alone on our deficit every year. It's not good. It's got to stop. You got to let the private sector do the job. The government's just going to make it worse and worse and worse and worse. And then all that money is going to go to the fat cat's pockets. So you're handing over trillions of dollars to these guys, and it's only going to go to a small portion of people. We'll catch you later, retail traders. See you this coming week. I'm very excited, although this was a doom and gloom video. We could have hit a bottom already because we had such a hard flush, or we can continue the weakness and hit them moving averages that I mentioned in the video. Add that 100 EMA. I just added it here a couple last week from a trader on Twitter that I follow. He uses that 100. So I'm going to start using it and seeing where we are, because we are in a sell-off. I use a lot of SMAs and EMAs, but I've used the 100 SMA, but not the 100 EMA. And I'm noticing a lot of the professional traders use the EMAs. They only use the SMAs when it comes to real hard predictions for support and resistance levels. But they use the 8, they use the 13, they use the 21 EMA for directional turns. And then they use the 100 EMA, and the ones are for solid resistance levels and support levels. Have a great day, retail traders. You learn every day, I'm telling you. You hang with me, you learn something new every day. I'm not a fundamental trader by any means. And I've never really traded off news until this last couple of years, until this idiot took office. Now it's always news, headlines, everything, the market running on headlines instead of fundamentals. This is a trader's market if I've ever seen one. Love scalping this market. And I loved swing trading it this year. I mean, nailed that 200 SMA. And I said, swing these babies. These things are cheap. Cheap. Now they're expensive. They were very expensive. Now we're kind of cutting back a little bit. We could be finding some kind of support in these moving averages off this inverse head and shoulders. So just think about it. That next chart pattern is the inverse head and shoulder. That's it. That's the only one I see. You could have maybe an ascending triangle right here. But this inverse head and shoulders, which was a wedge, thought I had to. Come on, Jimmy. So you got snake, triple top, down to the 200, into a wedge, boom, to an inverse head and shoulders. So your two trend lines are going to be the bottom of that wedge right there, or the top of that wedge down here at the 200 SMA on the weekly time frame. But that's a hard sell-off. You know what I'm saying? If you want to keep this market bullish, we got to keep it up here above the 51. If not, it can get real nasty and start moving down into these other moving averages. Have a great day. I know I really spit out a lot of crap, and probably very few will watch this whole video, but I had to get it out. I had to get how I feel about the market, how I feel about our government, how I feel about the war, how I feel about the open border, how I feel about the inflation, how I feel about the deficit. There's just a lot of bad stuff out there. Nothing's getting better. If things were a little gloomier, I mean, your president said we were going to have some dark winters, and we've had them. We've had them. I can't believe a president would say that, but that's what he said, and that's what we're getting. Have a great day, retail traders. This is the Sneaky Snake Trading Strategy. Mr. Doom and Gloom today.